let's see what's going on here in the markets. So it's 9 a.m. Central Standard Time. What we're looking for is we're going to see what happened at the 8:30 for the S&P. So there's a nice wide candle right there. So you just draw top and bottom. Now from there, what we're looking at is, so we closed down here to the downside right there. See, we closed down there to the downside. So the target we're looking for this trade right here is the 1.414 level to it. It did not get hit. So what I look to do is I look to trade this one right there. We're not doing 114 pips. Where'd it go down? All the way down there. So we take it down somewhere close to the bottom of the box right there, where that's the bottom of the full body candle right there. But price has to come up and hit close to the top, kind of around the top right there. So we're just going to leave it right there. That's going to be our entry we're looking for. If it does, price go up and hit that, then we move the exit from the 1.414 down here close to the bottom. I always have my exit a little bit higher than it, because like yesterday, for instance, in the Dow Jones, came down, hit about right there, went back up again, I got back in again, came back down again, and hit it for a nice trade. So I always get out a little bit sooner than the harder exit. But if the price comes down and hits down here first, then it is said and done. There's nothing you can do about that. And then also, since we have the candle close to the downside right there, so what we look for as well is we take the high of the day and we go down and we look for the 50% trade right there. So if price hits off of that 50%, that initiates a trade, a short trade. Exits is at 38%. I don't get in right there, because then if price doesn't hit the 38, keeps on moving up, hits the 61.8 right here, then the exit will be the 50%, and that's where I look to get in, because it doesn't move from there. But what we'll do is look at, where's the 8:30 candle? This is the 8:30 candle right here, because if that 1.44 gets hit, then we're going to move that one. Let's check the Russell. Russell's selling off today. Let's see here. Where's the 8? This is the 8:30. Okay, nothing we can do there as far as the bar trade. But for the retracement trade, there is, because it obviously hasn't gotten hit yet. So here's the high of the day. These blue lines at the top and bottom are these dotted lines. Let's see. There's a dotted red, dotted blue. It just shows the day's high and low. Makes it easy to mark. So what we're doing, waiting for this one. Whenever the low sits in, we go retracing back up. The first entry is 50 down to 38. And then, but the one I look for is the 61.8. So Russell is, oh yeah, it's selling off big time compared to everyone else. And then market's all messed up today, goodness. The Dow Jones, let's see here. There's that. So that one's already said and done. Let's see if that one got hit. No, it still hasn't gotten hit yet. The 1.44 still hasn't, and we still more than likely have, we still have that trade going on as well. So a lot of lines on there, but we'll see if this one comes down there and gets hit, and that would take that one off there, and then we'd just be looking at the 50% trade here in the Dow Jones. Crude oil, see what this is doing. One thing I'm looking at to see if you can just blindly take a 50% retracement back the other way, because you see like here today on that day, see there we got the box. We'd had the first close below it, so what we would be looking for, which did get filled, is we'd be looking for the retracement back to the upside, which it did happen, and then we short it down there. So that one's done. But then I was also seeing, can you take it the opposite way as well, from down here going up to the next day? And so that's where the initial entry would have been, and then hit the 61.8, but never hit the 50, and then it's just sold off all the way down there since. So I'm waiting to see for this one. If it is valid, you can take it the other way. Still has some more room to go to hit the 50%, but that's why that is on there. So then going over to today, is this the 30? Oh, that's a nice one. All right, that works out good. So hasn't done anything yet, hasn't closed outside the box, and that's what we're looking for. It's still right in the middle of it for oil. And then for Nasdaq, oh man, that's a fat boy right here. 8:30, there's the box. There we go. So I'm just waiting to see what that one's going to do right there. Let's go back to, okay, that one's said and done right there. Look at that, dadgum, selling off big time. So we'll take that off there. So that one's done. You see it hit the 1.44 right there. Unfortunately, didn't come back up there and hit that, but it's the way it goes. You know, you could have gotten in, or I could have gotten in any time right here, but I just play it safe because it has plenty of times before. You know, you get in right around here, and then I'll tell you what. Let me highlight that. I'll make it easier to see. Have gotten in, you know, right when it closes below it, or even just right up right here, but then the market just takes off the other way, and you have to get in for a second contract, and it just has a lot of. I don't like doing that, so that's why I wait. You know, missed it, but no big deal. That's the way it goes a lot of the time, because just when you start getting impatient, you start getting in these kind of early entry trades right there, anticipating like, oh, I missed the last 4, I missed the last 5, it came down here and hit that. You know, I could have made, let's see here, could have made a good about 7 points right there on the S&P 500. So you start getting mad, and then all of a sudden you start getting into there, and it may work a couple times, but then eventually you get one, and it just takes off, you know, way up here, way up here, way up there, whatever, and then you're stuck in that trade, and then you want to get in a second time right there, so now you're in 2 contracts because the exit has moved right here, and you want to get a profit, but you have to wait forever for it to eventually come back down and hit it. So what I prefer to do is I'll miss these trades, but get in like right here, get in right there, and then after that just, you know, wherever. Typically I would wait until all the way back up here to the 4.236, because that's when you get a huge move the other way, but when it comes back down and for it, you're going to make a ton of money off of it, and that's what I'm looking for right there. So that one's done. So the only trade we have set up right now is going to be this one. Well, let's see if this one's still even valid. Yeah, it's still valid. All right, so we're just still waiting for 50% setup right here for it. So now everything's starting to, I mean, it's not a huge sell-off. It's only half a percentage point today, but it just looks massive with these red candles right here. Let's see. See what we have going on over here. Let's see here. That's not us. FOMC. Okay, there will be some movement. We got some people spouting off today, so there'll be some movement here in the market this afternoon. See 12:15, and then right before the market closes, and then even tonight. Why is he speaking twice? Huh. See, core retail sales were down. Retail sales were down by quite a bit. So yeah, that's why the market's going down. Let's see, U.S. retail sales rise by less than rose but less than expected. That's what it was. So that's what market's doing that. One thing I am looking for in the Nasdaq is I'm actually looking for a bigger sell-off for this one using the 30-minute chart right here. Going all the way back to right here. This is just a simple semaphore trade for it. You can use that semaphore, and you put the extension lines off of it, and then you wait for the 50% retracement back to it, and it has not gotten hit yet. It has been bouncing off the this is the 4.236. You see it has a negative number in front of it, because when you go the opposite way, you have to take a percentage point off of it. When it goes negative for some reason, so that's really 4.236. Or if you go down here, I don't know if you can even see. Do I even have it down there? Yeah. See, there's 4.236 right there. And the opposite way is negative 3.236. But anyways, so yeah, what I'm looking for is a retracement all the way back down here to 12,822 for that eventually to happen. So just waiting on that. See the MFI, now it's in the middle of nowhere. That just shows overbought, oversold. And same thing for the daily. It's no help at all. So we'll just go back to the old 15-minute charts. I like trading on 15 over the 5. Unfortunately, TradingView, the platform I trade off of, it didn't have tick-based charts like NinjaTrader does. That's the one thing I miss about NinjaTrader, where it provided tick-based charts rather than just time-based, where every 15 minutes a bar is formed, where every 2,000 trades that were executed, a bar would be formed. And so it just shows a little bit better movement for the volume of the market, in my opinion, but it's no big deal. And the reason why I don't do 5 minutes is that's probably the one closest to the 2,000 tick chart for when the market opens. Now, obviously, in the overnight session, it isn't because there's obviously a lot less trades. But for the opening bars I look for, I had looked at using a 5-minute chart or the 5-minute bar for the opening bar, but I found out that 15-minute bar seems to be a lot more sustainable, a lot more accurate as far as the movement you're looking for. And then when you get that close either above or below it, it shows a lot better area the direction is going to for it. I mean, maybe I'll start looking at the 5-minute chart again, but right now I like the 15-minute chart because, for instance, like the 5-minute chart, that would have been it right there, and then obviously it would have gone up there and hit the 1.44 level. And then if we were looking at the 50% trade for it, you can see it came down, ticked off the 50%, and then went up to the 38 for that one to work out. But we'll just keep the 15-minute chart here for now. There we go. So yeah, keep this stream open a little bit longer. Just want to show the opening bell, what the let's go look at let's see, crypto. Well, we looked at, or I looked at oil. Yeah, we're just waiting to see. Still, it went above it, but did not close above it. Closed back down there for that. Try to get that more accurate. And yeah, wait, see what that one's going to do. Let's see. All right, well, that one went down and hit. Dow Jones did as well. And yeah, so we're just waiting on the retracement back up here. This is what I want to talk about. So like, yeah, yesterday, see here, using the opening 15-minute candle, there's the body of it. The blue box signifies the body. Go right up there. And so what happened was price closed below it, so signifying downtrend. Did not go down here and hit the 1.44 to close it. Instead went up right here. I got in I think somewhere right in here for it. Then I had my exit slightly above it. You can see the blue arrow right there. It got me out right there. And then later in the day, came back up again, close to the closing bell, and got in about right here. I think it was about right here. I think I initially had my entry right up here. Didn't get hit, so I moved it down. Got in right about there, which for once turned out to be pretty much the high. Usually I'd never get in that accurately for it, but anyways, went in and got hit. And in the overnight session, see it came down and hit my exit right around down here, and then completed the hard exit actually right there as well. So that is, oh, let's not do that. That is how that one works. And then for the 50% trade, it just went just like that yesterday. Hit off the 50 back to 38. So I don't know. Maybe you should get back in the 50% trades because there's a lot of money leaving out by not getting in. It's just, it has happened before, which I hate. The market hits the 50 but doesn't go back down there. Hit the 38, it just takes off that way. So knowing my luck, what will happen is as soon as I start getting in the 50, the market will just skyrocket off the other way and have to wait forever for it to eventually come back down and go and hit back down to the 50 after hitting 61. Let's see if one thing I always try to get to work but never could work is that supply demand area, because I mean it is extremely interesting, but to me it's very subjective in how it works. Like for instance, you see you have, see here you have kind of like a base consolidation right here, then you have a big move up. So what you'd be looking for is using that as the low and that kind of as the high right there, and then move it over right here, and that would be looking at your entry level to get into it, where they can get in right there, somewhere in the middle or down here at the bottom. And then in theory there's all these orders, buy orders still, that need to go get filled, that got missed once that bar took off. So you get in and price is supposed to hit this and bounce back up, but as you can see right here, it didn't happen. It sold off a bit, eventually came back up and would have gotten you out on anything, but it's just, I don't know, it's cool in theory, but I never found a way to make it work. Because I mean, like, look at this down here. So we use that. Come back over right here, and look at that. There wasn't really. He never even came back up to the top right here. Sold off. Eventually it did, but I mean, how much drawdown do you want to take to guesstimate for it to come back up? But then, you know, when it does work, you're like, oh dang, I missed a good trade right there. So I don't know. But right now in the market, just waiting for stuff to pop back up. And see down in the MFI, the 15-minute chart, it's completely oversold here, big time on the Russell. So it doesn't mean price is going to turn right when it gets down in there. Because as you see, like, look at this right here. Price got into oversold right on about this bar, and you know, it was stuck in the oversold territory and still had a good run up before you eventually had the move back down. Then you have, you know, an oversold level down here. This overbought, sorry. Or wait. I always get it confused. Yeah, overbought. So this is overbought right here. So it's overbought, and then didn't get sell off, and then you have oversold down here. It hit right here, but still kept going down here. It went down oversold. Had a little pop back up, but that's all you got before we had another oversold, and so now it's going back down here. So it just tells you to look for some type of if it's oversold, look for some type of support. You know, it didn't tell you how much, but some type of support. And when it's here, it's still overbought, so look for some type of resistance or sell-off for the market. So that's what that thing is signifying right there. Yeah, Russell's taking the brunt of everything. Dow's trying to catch up. It's got ways to go for it. Let's see if oil's still in the box. Can't do anything. Same thing with the Nasdaq, still in the box. And this one, SP 500, waiting for the retracement back up here. And it's also in a potential 5-wave move. See 0, 1, 2, 3, 4. If it breaks below the yellow line, it's invalidated because that would go into wave 2 down there. And the target we're looking for is somewhere up in here for it. It can go higher than that, but that's the target we look for it to be done. I think that's it. Let's see. Yeah, that was about it. Yeah, look for that right around 4190-ish, something like that, for that one to be done. But we'll see. There's a whole lot of consolidation going over here, so I wouldn't be surprised if this thing rolls over and takes a dive down here. Even so, but right now, as you can see, this is what I talked about yesterday on the market, kind of the market daily review, is that S&P 500 is in a big range of 1, 2, 3, 4, 5, 6, 7, going on 8 days now, trading days of being in this range right here. It's had a little pop up to the upside, but nothing much. And then you have, you know, you could either say that's the lower part, or even move it right up here and say that's the lower part too. It had kind of moves either way, because typically when it's in a range, if it pops out one side, you're gonna get a pop out the other side. So they had pop up, pop down, pop up, pop down. Now back in the range right here. So that's, I guess I'll leave those black lights on because it does show an interesting support and resistance area for it. So once you get that big move out of it, that's going to really decide which way it's going to go. And so now it's looking like it's getting down here to the lower range for it. So we'll see when it gets down into this kind of box area down in here. This area down in here, is that going to be where it has been for a while now? Is that going to be the support area, and now we're going to get a move back up? So it'll be interesting to see, especially with when those FOMC people speak today, what's going to happen with that. Let's go over to yield Bitcoin. Bitcoin's been selling off a little bit. This is also a potential 5-way move. 0, 1, 2, 3, 4, 5. Breaks below the yellow line. It's invalid. Still hasn't yet though. Looks like, oh, we are looking for it. Looks like a retracement back to it. I'm not sure what time frame it was though. Or probably way back over here. Using, oh, it's a daily move. That's what I was looking at. I was looking at a daily move. That's what it was. So let's see. There's the high. Well, that's the high. I'm not sure what trade this is. There's no semaphore up there or anything like that. So, but apparently I put it on there some way for it. I think I'm gonna take it off though, because I'm not really sure what that was. We got a huge gap right there too. But anyways, I was waiting for a 50% retracement trade down to here. It has gotten close to it, but not quite there yet. But it's no big deal. All right, let's go daily Bitcoin. Let's see what's going to happen here. Let's see here. 9. There we go. There's that. Had to move back down. So the move down. That. Let's see. What thing is with that? It's already been up there and hit. See, there's already the low of the day. There's the high, and then when that broke down, we were looking for the tracing back up. But this is when I usually just ignore it. Don't even worry about trading it because see, it's already kind of hit that, and we have a low and high set for the day, so we just forget about that one. So Bitcoin, it's going down into the oversold area, but not there yet. Weekly's punching off the overbought areas. That's interesting. Looks like that gap did come down and get filled right there. Ethereum retracement to the day sales 74416. Huh, I must have been looking at that one another time. The exit for the daily extension trade. Not sure. Oh, that was when I was looking at taking that trade back down there. Nope, it's not. Doge, that's an old one. Litecoin, this is another potential Elliott move that's following Bitcoin. See 0, 1, 2, 3, 4. Then the exit is up here. It almost got hit right here, so I thought about calling it, but slightly missed it. But sometimes if it's close enough, it works. But right now, we're just going to leave it because if Bitcoin moves up and hits that 5-way move, then it's going to bring Litecoin up with it as well. Let's go back to the futures here. So starting to pop back up a little bit. So we'll see if we get that push back up. That'll initiate that trade for it. And then I may have a, yeah, we'll go ahead and put one up there. I'll just do that, make sure we get out of it. There we go. Nothing yet for that one. Oil getting close, but still falling in that 15 minutes time frame. All right, Nasdaq looks like it's could. What we have? Let's see here. Is it going to hold above it and make it an upside move? 58, 59. Yep. All right, moves to the upside here in the Nasdaq. So we take that and that. So the target we're looking for is 1531.75 for that. Hopefully we get a sell-off right here. It comes back down. We get in right here. So I mean, you could get in, you know, right here, take it up to right there. Good little 25-point move here on the Nasdaq. But again, what you have to watch out for is if price sells off and comes and hits that before hitting the 1.414, then you got to move the exit down to just below that blue box right there. Home Depot post worst revenue miss in about 20 years. Let's see what that looks like. No, not that bad. Sold off some, obviously, but hardly anything. Huh. There's a gap up here. Needs to come up and get filled. Let's see if we can find a trade out of Home Depot. Well, let's see about this one right here. So we have that low to that high. Hit that. All right, so let's see what we're looking for is we're tracing it back down to the 50%, and that's already gotten filled right here. All right, that one's done. There's some from way back over here. Broke it, came down, got filled, that came down, got filled. So we'll look at using this one right here and that one. Let's see how high did it go up to. 2.89. Oh yeah, that thing is popping off big time. This is the reason why I don't like the semaphore trade, because it can go super high, and especially going long with it. And then let's see here, the exit we'd be looking for. Oh, it came down, got hit. All right, well, that one is done. Yep, came down, hit it right there, close enough to it if it did. Yeah, it did hit it actually. So how high? Golly, that one above the 11.89 extension level. Yeah, that's the thing. If you could time these trades for the semaphore trade right here, that's the issue. Is sometimes it starts going past these Fibonacci extension levels, and you never know when it's going to pull back for it. So that one's done for that one. So if there's anything to the upside we could get here. I think everything's going up and hitting it based on that one. Yeah, that one did right there. So if he had done like even that and that, or that would have gone down to the almost 4.236 before it came back up and hit that off of there. But nothing on the daily. 4 hour. We'll go the hour. So you had the sell off. It's got some support, come back up. And the earnings miss. You have that trade right there. Oh well. Let's see what else. Alright, let's go back to the futures. So I had it set up, sell limit. Oh, look at that. This one is done as well. There's the low, price came up, hit off of it right here, and then finished it off. So that one is done as well. So there's no trades today. Or there were trades, but none anymore left in there for the S&P 500. Let's see, Russell still has potential. Dow Jones still has potential. Oil still needs to decide what it wants to do. Alright, there we go. Okay. So price did not hit the 1.414, and now it's starting to sell off a little bit. So I'll go ahead and put an entry right here for the Nasdaq. Oh, it's always negative. Move that up to about, that's a good spot for it right there. So that'll be the entry. The price keeps going down and hits that. Now the top of the box is the final exit for it. But if price moves up and hits the 1.414, then I'll take this off because that's the initial target for it. Let's see oil. Okay, oil's looking like it's fixing to go down to the downside. And then if that happens, I won't mess around with it because then we'd be looking for the retracement coming back up. Let's see, down. But the thing is, it's already been, hit off there a lot today, even though that would signify that. I'm not going to take it off of today's highs and lows, and it's already been hit off of there. Because what you want is where price hasn't been hit off. So, yesterday was a real weird day. There was a close below it right there. There's a close below it right there. So you'd have taken at the time that was the day's high. So you take it right there, hit off the 50, even the 61.8 down to it. And then here's a better one. Actually, we'll go when the thing isn't messing up. Show you what you want to see here. Like this one, for instance. This is what you want right here. So there's a 15-minute opening candle, closed higher. So we were using a long trade looking for the 50%. And you can see price never came down and hit the 50% since that's new for the new high. So you just keep on moving it up. Still never hit it. Move it up until it comes back and hits it. And there we go, right here. So on that day, came down and hit the 50%, and then we're out there to the 38%. So that's how that works for it. And when it's not making a new high from the 15-minute opening candle for when it breaks out, and it's already been in congestion, all that kind of stuff. I don't chase it looking for that retracement trade. We still have another 8 minutes before this candle potentially closes below it, and if it did, you see it's already had all this stuff all in here for it. So we're not worried about that. Gold is doing. Small one. Goes down. Yeah, nothing much in gold today. Go long term. Let me show you something for the, let's look at the weekly chart. So we're looking for a pullback here in the SP 500. This is just a simple semaphore trade. You can see using the red semaphore, price going up. Now we're waiting for the 50% pullback. Hit off the 4.236, that's the red line right there. And there's the high from the next Fibonacci retracement level, and we're looking for it going down to this right there. at 27.95. So that's what we're looking for that sell off here in the SP 500. So will be quite a big one from where price is currently at 41.31, but it'll take us down to kind of right in the middle of the when we had the COVID sell-off. I mean, price can of course go down lower because look at that 61.8 is at the same level, pretty much where the lows were during the COVID sell-off, right there. But the target we're looking for is the black line, 27.95. But the way this trade works is, fortunately, I just don't have an indicator or set up that shows exactly when the turn is going to happen. All you're going to do is go off these Fibonacci extension level lines, but they don't work every single time, as was shown by in that Home Depot trade a little bit. So that's why this trade setup is kind of wonky. There's no direct way to really know when the turn is going to happen. Just know it's eventually going to happen for it. But right now it's definitely found resistance off the 4.236 level right there for it. What's that? Oh yeah. Yeah, so oil's looking like it's going to be a down day. Is that the 15-minute? Yeah, right there. So we'll see here now. It's got another little over 2 minutes to close to make it a short trade setup right here for the 15-minute box. And we're not going to do the retracement trade just because it's already been in a bunch of congestion today. So now every market is, except for the Nasdaq, is in the red. And let's see, one thing you can also do is from day to day, the previous days using the low and high. So there's the low right here. There's the high. Most of the time, not all the time, but most of the time, when price hits in the previous day's extension level 1.146 to the 1.44, that is going to be the resistance zone. Well, you know if it's going up, and the support zone if it's going down. And as you see so far today, prices hit up in there here in Nasdaq, and that's been the resistance zone for it. Now, it doesn't work every single time. Like I mentioned, it does work most of the time, because here you'll have like one right here, right there. Look at that, it just blew right through it and continued going higher, and then actually it came back down and used that support to go back up. So it doesn't work every time, but it does work most of the time. Like look right here, here's another one. That's why you can't just straight trade off of it right there. See, like right there. And that's one thing that's interesting though, is when it does blow through it and price does come back to it, it's using that as a support level. So maybe that's one thing to look at for that trade for it. But like, let's see, like this one, look right there. See, that's used as support. We have this one right here. Use as support, came on back up. So that's typically how it goes. So when you see like a big movement in a day, then you know that it didn't. This area was not used as the support or resistance area for it, but it's just the big move day. So let's look at this again. So I use that right there and that right there. Okay, that kind of used as support and resistance, but price came back down. It used as support. That may be a trade to look at for when price blows through it. Look for price to come back down, and you can take it as a support trade if coming down, or a resistance trade if going up. So that is one thing I'm gonna look at. All right, let's see here. So we have a new candle forming. Let's see what oil did. Okay, so oil, we definitely have a short trade down here. Target we're looking for is 1.414 right there, right about down right there. So I'm gonna close this up at 10 a.m. Central Standard Time. Just watch the opening market. Try to do this more often. It's pretty interesting looking at this, but just keep it around an hour or so, just to see, so we can see what setups are forming for the day and what to get into. So if oil doesn't hit this 1.414 right here and continues to move up and hits this right here, that will be the area I will look to short it all the way down to about somewhere right there. I'll just show you real quick. We can see where's the exact top, somewhere about right there. So just put it right there. Trade. What's it always negative? There, so it won't be 50, it'd be about right there. That's a good one. There we go. So that'd be that. But right now, it obviously has shorter distance to go to right there. So if you got in right here, or say you wouldn't be able to get in right when this bar closed because it gapped down for the next tick. Say you would get in somewhere probably right here. You're looking at about a 16, 17, 18 tick gain for it. But again, thing you gotta look out for, if this doesn't get hit right there, and price skyrockets up right here, that moves the exit to this bottom bar right there. Nasdaq is getting some support, moving back up. Wish it would sell off. Oil, wish it would do the opposite. Wish it would get some buyers and push it back up here. I think, and then for these other ones, yeah, and this is a retracement trade for the Dow. Retracement potential for Russell, and S&P 500 is done for the day. So it looks like Nasdaq's leading everything higher so far. So early sell-off has gotten withered down because Russell, yeah, was down about 1.5 today, percentage point and a half. Now it's only about a percentage point. So we'll see if this continues, or if this is going to be just a measured move here today. Whether maybe it's not from the day's high, but the measured move from previous day's high right there for it. But for this trade, we're looking at that right there. Because as you can see from if we just used 2 days ago, the previous low right here, these are just straight measured move trades right here. Going back down, look at that perfectly right there. Off the 50%, goes back up there, hits the target, and then so we just reload right here. Look at that, perfect, right off the 50%. Goes up there and hits the target. So they go down, reload, but oh no, look what happened here. It totally changed. Price at the 50% just blew right through it for it. So this could be continuation down to the downside because we had a measured move right here. Look at that, right off. I mean, these are just textbook, right off the 50% down there. And so for this one, for that measured move down, you're looking at 1758 for price to retrace back to at least at that point before potential measured move back down here to about 1735.7. So it's a real clean setup. It looks great. Problem is figuring out when you're going to get the measured move, when is it going to hit, and which way is it going to go? Because after the fact, I mean, it's super easy to see. I mean, look at all this stuff. Look at this. Oh, if I just took it from that high to that low right there, price came back up when 61.8, and then look at that, hit right down there, perfect. Look at all that money you would have made if you had got in right here, all the way down there, right? But problem is, it's just do not know when price is gonna, which way it's gonna choose. Like there's another one came down pretty close. We're off to 61.8. You could even have used this one again right here. We're off to 50. Didn't quite hit the 1.146. Look, guys, reloaded up here. See if that's going to come down and hit. So it's a really cool setup. The problem is I've never figured out where. Like, look at this one right here. This is just perfect. Using that low to that high, right out. It didn't even go lower than 50%. Right off of there, and then look at that right here to the 1.146. I mean, that's just beautiful. Look at that, 43 points or so for that trade. But again, just like, how do you know price is going to hit off that and then carry it back on up? How do you not? How can you tell if it's not just going to keep on moving down? So that's the issue I have with that trade setup. But after the fact, it looks great. Super easy to spot after the fact for it. It's getting lower, looking like it's going to get taken out here pretty soon for the oil. So then that would take out all the oil trade setups for the day. So then the only ones we'd be looking at would be potentially Nasdaq, retracement on Dow, and retracement on the Russell. So that's, oh, it's both ways though. That's a short, that's a short. That is a short, and that one's about done. One more tick. No, not done yet. Let's see, Nasdaq's up. Whatever. Oil's about done. If it goes down one more tick, it's done. One more. Nope, not yet. Look at the 1 minute. There's the 1 minute. Get that one more push down, one more seller. There it is, done. You saw it live. There you go. Done. So we take that off. So that one is done. There we go. So, oh wow. So oil is going down. So this one isn't looking like that will be a valid trade setup that I want to see. But you know what? I do need to make a note to myself that, let's see here. Where's the day where we had a blowout trade? Yeah, like right here. So if I use that high and that low, here we had a blowout. Has price even come back up here yet? Price even come back up here yet, so can't use that one. Let's see here. See if this works. So that one didn't work a whole lot. It did provide some resistance. So the thing is, how much do you take? So what I'm talking to myself right here is using the daily high and low for just to see the extension levels, targets for next day. You know, here it hit there, but there's no support off there, and price just blew on past it. So then I was thinking about, if when that happens, then when price comes back up to these levels, the 1.4 and 4 to the 1.4 and 6 levels, now you can use it as resistance, since it's coming up to it. If it's coming down to it from being up, then you look for buying. But you know, we did get right off of there. That one didn't quite hit. That one did hit. You did get some resistance down from it. So I guess the thing now is, how much do you look for? You know, is that the setup? Is the setup like down here And so you take the low up to probably about the 38, because I believe that's the 30. Definitely, yeah. Okay, we'll say 0.236 trade, 23.6 trade right there. So that could be a potential target for it. From that, or do you have it at 50%? Or do you just say that 23.6, or if price goes up and hits that, then the exit becomes the 1.414 trade, because it did come back down and hit that. So we'll just draw a little note here and say the daily extension target gets blown out. Can you take back to it? First entry, the 1.414, and exit is 23.6. Highlight this whole thing, make it easier to see. So yeah, that's yeah, let's see this one right here. Blow right through it. Yeah, hit right off of it. And it obviously came up to the, hit it off the first time. Yeah, hit off the first time right there. So, well, could be potential. We'll see. Yeah, look at that. Hit right off the 1.414 level. Right here. Actually, right here. Sorry, right there. Right. What's the low for that? 76.73. Yep, 76.73. Wow. Okay. Hit right off of it, and then hit the 23.6. So if you had it 73 right there, is that $1.56, 156 tick move in oil. Interesting. Huh. Could be an interesting trade. We'll keep an eye on that one for sure. Alright, real quick, 1 minute left, and then gonna call it here. Let's see what's, oh, that one's done. Alright, Nasdaq is done. Let's see, price came back off there and hit it. Now in a perfect world, I would have said, okay, price closes above it, I'll just put my entry somewhere down in here, get in right there, hold it right there, but it's not the way it works. So alright, so Nasdaq is done. Is there a, no, the 50% trade is done as well. Yeah, because using that, there's the close, and it's already jumbled up within the 50 for that retracement. So all right, oil, nope, oil, let's see here, still waiting for the retracement trade for that and retracement trade for that. So those are the only true two trade setups I have potential for today. But anyways, thanks for watching, and I'm gonna call it a day. Then for the opening bell, try to do more often. That's because usually about the first hour and a half of trading is when the fun things happen as far as trade setups and everything like that. Then the rest of the day, just waiting to see if price is going to come back up and hit these levels. So that's pretty boring. So, but that's it, and that's how I look at the markets. All right, thanks, bye.